All right. Preparing closing entries. So here's the story. We've produced our financial statements. Hey, I need financial statements. And the, you guys sign? And the boss comes, you didn't sign? How'd it pass you? And the boss comes to you and says, hey, these financial statements look great. You did a great job. Here's a $10,000 bonus check. Go to Vegas for the week. All right. As you're heading out the door before you go to Vegas, you go, oh, wait a minute. I got to do one more thing. I have to close the books and get it ready for the next period. Gregory Mitchell's here. Jessica's here. Serenian's here. Oh, fantastic. Shelby. How'd you miss the master?
I guess it is.
All right, Tyrone's here, Daryl's here, Flint, Michael, and Riley. And why do I stumble on your name? Alejandra, Zamani, Haley, Frazier, Kristen.
Last name.
Where am I at?
Very last name.
Christine. Why do I want to call you Kristen? Because my niece is Kristen. That's why I want to call you Kristen. Leave the N out. Kevin is here. Fred, Christian, Bruno, my wrestler. Megan. Aisha. Did I say that right? Aisha. All right. Everybody's got the name. All right, where was it? Oh yeah, you're heading out the office. And you go, okay, I got to close the books and get them ready for the next period. And you say, okay, well, what do we need to do? So here's the story. We have income statement. We have a balance sheet. What happens to the ending balance of the balance sheet numbers for next month? Where do they go? Ending balance of the balance sheet numbers go to the what balance of the next month balance sheet? These numbers,
retained earnings?
They stay on the balance sheet, but the ending of one month becomes the what of the next month? Right. And I'm sure I was asking that wrong. So the ending numbers of the balance sheet become the beginning balance sheet numbers for the next month. So these are called permanent accounts. Everything on the balance sheet is a permanent account. Assets, liabilities, stockholders' equity. These numbers never go away. They just get transferred from one month to the next. If you're in business for 70 years, those numbers are just transferred every month from the ending to the beginning, ending to the beginning, ending to the beginning. All right, so that's how the balance sheet works. The income statement, revenue, expense, accounts. These, what do we want to do to these accounts, do you think? Does one income statement want to be muddied up with the numbers from another income statement? No. Where the balance sheet, the numbers are transferred and it basically gives us the balance of our assets and liabilities and stockholders' equity. These numbers need to stand on their own, right? Every income statement needs to stand on their own. So our goal, at the end of after we produce the financial statements, our goal is to make all these accounts zero. So next month we start out with a clean slate, nothing on there. And the only way we can do that is by making these accounts zero. These are temporary accounts. These are permanent accounts. So for the next 15 minutes, we're going to learn how to make these accounts zero. It's real easy. One other thing we got to make zero is the dividend account. We got to make it zero because we want that to be a clean slate also when we talk about the balance sheet. All right. So, balance sheet accounts are permanent accounts. Those numbers stay with us from year to year. Income statement are temporary accounts. We need to make those accounts zero. And just what I said, we need to make them zero. To achieve this, the revenue and expense accounts have to be transferred to the, we're going to create this little phantom account called income summary at the end of the period. And dividend account. All right, so we're going to go through all this here in a second. All right, what we're going to be doing is called closing entries. So let's see how this works. Give you a real simple example. 4 steps. Income summary, expenses, revenues, and dividends. All right, so the first thing we do is create this little phantom account called income summary. We're going to close everything to income summary. There's another way of doing this, but this is the way the book teaches us, so that's what I'm going to show you. All right, so we have revenue accounts we need to make 0. We've got expense accounts we need to make 0. We've got dividend accounts we expect to make 0. All right, so when you come upon a revenue account, what do you expect to see, a debit or a credit? Credit. So let's say we have $100 of revenue. You come upon an expense account, what do you expect to see, debit or credit? Debit. Let's say we got $50 worth of expenses. And dividends, debit, right? After eating dinner. All right. So step 1, we need to make revenues 0. How do we do that? Well, if you've got a credit of 100, how are you going to make this account 0? What are you going to do? Debit revenues. And if I debit revenues, I have to transfer to this little phantom account called income summary. That's your journal entry. So income, we always put the debit on the top line. Income summary. Yeah. Revenues, 100. Income summary, 100. That's your first journal entry. You've made revenues 0 and you've transferred the money to the income summary account. Step 1. Step 2. How do I make expenses 0? I have to credit expenses. If I credit expenses, I debit income summary. All right, so my debit is step 2. Debit is to income summary, 50. Expenses, 50. That's my second journal entry. Step 3. So that's what we did here. Revenues are transferred to income summary, step 1. Expenses are transferred to income summary, step 2. All right, we've accomplished 2 of our goals. Let's keep on going. The third goal is we have to transfer the representation of net income to the retained earnings statement. You say, okay. So if I've got 100 credit here and 50 here, my balance is 50 credit, right? And if this 100 represented revenues and this 50 represented expenses, this 50 represents net income, right? Basically, revenues minus expenses gives me a net income of 50 bucks. All right, so step 3 is to make income summary 0. So I'm going to make this account 0. Because I've created it, now I got to get rid of it. All right, how am I going to do that? If I've got a 50 credit balance, what do? I debit income summary, and I transfer the representation of net income to retained earnings. So if I'm going to debit income summary and credit retained earnings. Step 3, debit income summary, credit retained earnings. This makes perfect sense, right? Because you remember your retained earnings statement? Beginning retained earnings plus net income. This $50 represents net income, so I'm transferring my net income to the retained earnings statement, and that makes perfect sense from an accounting standpoint. So my third step was to get rid of my income summary account. I've made this 0 with a debit, and I have credited retained earnings. So 50. I got one more thing to do, and that's what we did here. We took the balance, which represented net income, and transferred it to retained earnings, and we closed out this account. That's step 3. Step 4. Now I got to make dividends 0. All right, so it's sitting there with a debit. What do? Credit dividends, makes it 0, and if I credit dividends, I'm going to debit retained earnings. So step 4, debit retained earnings and credit dividends, which again makes perfect sense, right? Remember your retained earnings statement? Beginning retained earnings plus net income minus dividends equals ending retained earnings. Dividends has the effect of reducing retained earnings. How do we reduce retained earnings? Well, debit is a subtraction. Credit is the increase side. Debit is the decrease side. So my ending retained earnings now is 50 minus 25 or 25. Ending retained earnings, this goes to the balance sheet. We all know that ending retained earnings flows to the balance sheet. That's it. 4 steps. So, step 1, close revenues to 0 and transfer the amount of retained earnings. Step 2, make all expense accounts 0, transfer it to retained earnings. Step 3, make income summary 0 and transfer net income to retained earnings. Step 4, make dividends 0 and transfer it to retained earnings, which has the effect of reducing retained earnings. And always put the debit on the top line and the credit on the second line, and it's going to look like that. Alright, so let me take you through what the PowerPoint is showing here. So at the end of our process, all the income summary, all revenues and all expenses will have, and all dividends will have 0 accounts, and we will have transferred net income to the retained earnings statement. Then we can go to Vegas. All right, here's step 1. We've got 2 revenue accounts sitting there with credit balances. How do we make them 0? We're going to debit them. And if we debit them, we're going to credit income summary. That's what we did over here. Debited revenue, credited income summary. Step 1. Step 2. All of our expense accounts are sitting there with debit balances, right? They're all sitting there with debit balances. How do we make them 0? Credit them for the same amount. Makes all those zeros. We're going to add this all up and transfer it to income summary. So if you're trying to remember, well, all you got to do is remember this one. How do I make this 0? Oh, I'm going to credit, which means I have to debit the income summary. That's step 2. All right. They're not showing you this, but 16.9 minus 98.5 gives us a 7105 credit balance, right? This isn't here. So we got a 7105 credit balance. Step 3, what do we need to do? We need to make this 0. How do we make it 0? We're going to debit it for 7105. Makes this account 0. That 7105 represents net income, right? Revenues minus expenses. Represents net income. Sitting there as a credit, how do we make it 0? We debit it. So that this is 0. And we transfer the money to retained earnings, which represents net income. That's step 3. Debit income summary for the amount of the balance, and credit retained earnings for the amount that represents net income. What if we had a loss? If we had a loss, we'd be doing just the opposite of what we just did here, right? So I think most of the situations you ever see in this class will be gains. If we get a loss, we'll cover it when we get there. Third step, we're done with. One more to go. Debit retained earnings for the amount of the balance in the dividends account and credit dividends account. So we got to make dividends 0. Normal balance is a debit. It's sitting there as a debit. How do we make it 0? We credit it. So if we credit dividends, we're going to debit directly retained earnings, which has the effect of reducing retained earnings, which from a theory standpoint makes perfect sense to us. And that's the closing process. It's that simple. Close revenues to income summary, close expenses to income summary, close income summary to retained earnings, and close dividends to retained earnings. You know those 4 things? It's an easy process. So here is the journalization. Everything is on here is just nothing more than what I did over here. Step 1, how do I make revenues 0? Well, I'm going to debit them and credit income summary. Step 2, how do I make all expenses 0? Well, they're sitting on the books with a debit. I'm going to credit all of them and debit income summary. Step 3, I got to make income summary 0. It's sitting there with a credit balance. How do I make it 0? I debit it and close it to retained earnings. Step 4, dividends are sitting there with a debit balance. How do I make them 0? Credit it and debit retained earnings. Step 1, step 2, step 3, step 4. 4 steps. You just, if you can't think of it logically, just memorize them. So what have we accomplished? Well, after doing all this, all of our temporary accounts have a 0 balance, so all of our revenue, expense, and dividend accounts have a 0 balance. We're ready for next month. There's nothing in those accounts to muddy up next month's income statement. All right, so here's what our accounts look like. So we're here, there's nothing here. These are just adjusting entries. We haven't gotten to our, here we go. Retained earnings. Here was our closing increase of retained earnings for net income, our closing decrease of retained earnings representing our dividends. Here's our ending retained earnings, and this goes to the balance sheet. Look at all of these expense accounts. Well, look at our dividend account. What's the balance in the dividend account? 0. So if we, income summary, 0. Expenses, 0, 0. 0, 0. Revenues, 0. We've accomplished everything we wanted to do. All revenue accounts are 0. All expense accounts are 0. Nothing in there to muddy up next month. And away we go. All right, let's look at this one. So here's the story. What's the journal entries to close these accounts? All right, step 1. We got to make revenues 0, right? They're not going to show up one at a time. We got to make revenues 0, so we're going to credit. We're going to debit revenues and credit income summary. Should be our first one. Debit revenues, credit income summary. Step 2, we got to make all these expenses 0. So we're going to credit all these expenses and debit income summary. So we're going to credit all those expenses and debit income summary. Step 3, we got to make income summary 0. Well, we got to figure out the balance of income summary. It's revenues minus expenses. Revenues minus expenses. Here's the total revenues, here's the total expenses. So it's the difference between these two. So we've got revenues higher than expenses, so we're sitting there with a credit balance. How do we make income summary 0? We're going to debit it and transfer this net income to retained earnings. And then the last one, we got to make dividends 0 and transfer it to retained earnings. How do we do that? Credit dividends, debit retained earnings. All right, go to practice exercise 4-4A. And see if you can do it. I'll leave this on the screen to help. Follow the steps. Make sure you leave a, sorry, Shelby, I didn't mean to scare you. Make sure you leave a line for, if you know what the credit is, make sure you leave a line for the debit. Like on that second step, income summary, you don't know what your total expenses are until you add them all up. But make sure you leave a line up there for that debit, because we always list the debit first.